the budget. We just had one. When we watch the budget in our office, we have a Bloomberg screen and we have the TV. And the finance minister is speaking whenever he can, when he's not shouted down by the opposition. So he's speaking, and every time he announces a tax break for us, corporate India, salaried people, the index goes up, correct? And every time he announces spending on rural India, the index goes down, correct? Because of all of us say, well, he's wasting money. When Subbu and me and the research team at Quantum Mutual Funds, when we're watching that index and we're hearing the finance minister's speech, when he spends money on rural India, we clap. Because we think about it the other way. If we were sitting in rural India, and that's where 2/3 of the people live, by the way. If we were sitting in rural India, and we heard the finance minister's speech, and we had a Bloomberg screen in front of us showing the BSE 30 index, and the finance minister said, I'm giving a tax break to people in Bombay, or I'm going to build a new bridge for them, what will my index look like in rural India? It'll go down. And when he announces, I'm giving a tax break to you, I'm going to throw money at you, I'm going to give you a free meal or a free job or guaranteed job for 100 days, I'm going to pay you more money every day for that guaranteed job. My index goes up in rural India. And rural India is bigger, is larger than urban India in terms of number of people. But of course, we sitting in Bombay don't know that. We look at the index. The index for us is India. It's not. And that's the only proxy we have in terms of government spending on job creation. It's a bad proxy because we know there's corruption. We know that when the government wants to deliver 100 to rural India, 10 may get there, 20 may get there. 80 and 90 ends up in a Swiss bank account or God knows where else, or in some real estate firm, God knows where. The politicians know that. It's a good spread that they make. But that's the only proxy we have. So that to us is the biggest risk on India. That in the next 20 years, 100 million people don't have jobs, and that's a social time bomb. Time to get out with the gold that you have with you. So buy Indian equities, Indian stock markets we think look fantastic, and buy gold. And we have that, and we've kind of we have been recommending that for some time. Again, obviously, because I've got the quantum mutual funds, I've pushed quantum mutual funds here. But if you had put 80% of your money in equity mutual funds, like the wonderfully well-run Quantum Long-Term Equity Fund, and in gold, you put 15%. And of course, you had your liquid fund and money you may need in some kind of emergency. That's your rate of return. That basket would have given you an 81% rate of return by doing that. And we believe you should continue doing that. As you know, within Equitymaster, we don't encourage short-term speculation. We don't understand it. What we try to do is identify companies with earnings power over time. All of you all have worked hard. You've got to kitty your money aside. There's no government pension to save you all. You've got to build it yourself. And you've got to do it in a sensible, structured way. You don't need to trade every day to make money. If you just bought that index in 1980, 100, 17,000 today. That's a lot of money. That's a massive multiplier effect. So Equitymaster provides you with the tools to do your own research, so you can pick your own stocks. Of course, if you don't feel like doing that, there's always the quantum mutual funds and the other funds out there. But please avoid the speculation. It doesn't make sense. You're only as good as your last trade. I was reading the other day, one of my colleagues was giving an interview with this peer in the industry. He said that at the time, he had one. His one became 10, and then the 10 became 3. I mean, that's a wild swing. When markets went up, the 1 went through the roof. His 1 crore became 10 crores. And then the 10 crores became 3 crores. Oh my God, that's crazy. That's wild bets. Now he was lucky that his 1 became 10. What if some guy entered at 5 and 5 became 10 and 10 becomes 2 or 1? You get massacred. So trading is, in our opinion, a very, very difficult game. Very difficult. Casinos are far, nicer places to have fun. There are pretty girls who serve you drinks and all that stuff, and the food is free. Your broker is not good looking most of the time, and he doesn't give you free food and free drinks. Go to casinos, they're a lot more fun. With that, I'd love to end the talk, and happy to take any questions, I guess. Thank you.
Thank you, Ajit.